It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this TradingTips.com video newsletter on exhaustion bars, 1-bar ultra short-term reversal patterns. In this video, you learn how to spot exhaustion bars on candlestick and OHLC stock charts and how they can be traded. Let's begin. Let's start by taking a look at an exhaustion bar. Would you guess this pattern is bullish or bearish? Think about it for a minute. Unless you're familiar with exhaustion bars, you'd probably guess bearish. After all, there is a definitive downtrend here. However, studies show that trends like the one shown, with the big gap at the end, are most commonly indicative of a pending reversal. It is said that the big gap at the end symbolizes the exhaustion of the trend, and that's why the final bar is called an exhaustion bar. A bullish exhaustion bar, like the one on the previous slide, predicts the reversal of a downtrend into an uptrend. It develops after a rapid, steady move down and is culminated by a big gap to the downside. More on that on the next slide. Exhaustion bars, whether bullish or bearish, reflect ultra short-term market sentiment. It could be in the example from the previous slide that the stock will continue its downtrend, but only after a short-term rebound. Here are the key features of a bullish exhaustion bar. The price opens with a large gap down from the previous day's low. The intraday bar is extremely wide or long compared to other bars in the preceding trend. The opening price must be in the lower half of the bar, near the low, and the closing price must be in the upper half of the bar, near the top. Check the intraday volume and you should see a major spike in volume near the end of the day. And ideally, no part of the exhaustion bar should touch any part of the previous day's OHLC line or candlestick. Now let's look at a bearish exhaustion bar. As you can see, it's essentially the reverse of the bullish one. You might think that this looks like a bullish breakout, but you'd be wrong if it had the features discussed on the following slide. What are those features? Well, they're mostly the opposite of the features for the bullish exhaustion bar. Instead of opening with a large gap down, a bearish exhaustion bar opens with a large gap up. Instead of opening near the bottom of the bar, it opens near the top, and instead of closing in the upper half, it closes near the bottom. But like a bearish exhaustion bar, the intraday bar is wide and volume is heavy near the end of the session. This is because the volume increases as the price goes lower, predicting the pending reversal. In conclusion, it must be reiterated that these are ultra short-term patterns typically used in swing trading. The same principles can be applied to day trading, though, if you use bars that are hourly or minutely instead of daily. Regardless, it must be noted that exhaustion bars are not necessarily indicative of long-term trends. We hope you've enjoyed this TradingTips.com video newsletter. Thank you for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit TradingTips.com. Sign up for our free video newsletters. Become a successful trader by visiting TradingTips.com.